Welcome back. We're looking at a rally on Wall Street on this last trading day of the month, even as major market gauges are on track for losses. Joining us now, Oxbow Advisors Managing Partner Ted Oakley. Make sense of these markets, Ted.
Well, I think, I don't know if you remember, but a year ago I mentioned to you that the Treasury was our largest holding because we thought rates would really come down in a year. People were skeptical, that's what we thought. But on the marketplace, we keep bumping up against these levels, and then they give it back. I think what people are doing right now is they're chasing these tweets and pieces that come out in the news, and it's affecting things. And I think, but if you notice, all those sectors move together, so you can tell it's just a chase. They're trying to market chasing. That's where I think we are. I wouldn't be surprised if we just don't give it back again.
What about, though, going into after we get through August and when we come back, and John Hilson, rather, from the Journal has talked about this, that this is when the CEOs sit down and start doing their budgets for 2020, and they have to make decisions about investment, which has been softening. They have to make decisions about hiring, which has hung in there, has been decent. Is that when that we actually are more than a headline-driven market, where you get more fundamentals?
For sure. That's a good point. Because what happens is when they get back, first a lot of them are gone now, but when they get back, they'll get into a situation to where they're going to realize that earnings, we think at least for the third quarter, are going to be light. In other words, going to be negative. And I'm not certain everybody's ready for that. They would probably know it in advance, but I'm just saying that's going to affect the markets.
Are you still positive on treasuries? Would you put new money to work in treasuries? And pick your duration, but would you say put money in the 10-year at this point, or even the 30?
Yeah. Well, what we would do, if I were doing treasuries, now we still have the 20, and that was our largest holding, the largest holding we ever had, actually. But brand new money, if it comes in, you have to take a look, see what you want to do. We barbell it big, like we'll put one year and the other one we'll do 20 or 30. Here's the reason why. We think there's a really good possibility over the next 12 months that we go to zero on the Fed funds rate. I know people think that's far out, but if you think about it, if you look at all the markets across the world and where we're headed, there's a decent chance that we get to that point. And if we do, and you don't have any yield in place, you're going to have a hard time, finding it. And so I think that from our standpoint, we'll take that wager to say that if we're wrong, we've got a lot of short money if it goes the other way, and that's whether we're looking at that on the Treasury.
Do you think that before they would take the Fed funds rate to zero, so I look at it, it's at 2 to 2.25 at this point, so that's only four 50 basis point cuts.
Right.
If you look at it like that, but would they do bond buying and start blowing out the size of the balance sheet before they took the Fed funds rate to zero?
Well, my guess is that if you look at the people on the committee, that there's a number of them that think that we don't need to lower rates. And if that's the case, what happens is you're going to have a shocker come in, and then they all shock together, and then you get more aggressive on the downside. I know everybody thinks it's just a quarter coming up here, but I think somewhere in one of these months they really get shocked into saying, hey, we have to get really aggressive. At that point, they'll move the Fed funds first. I wouldn't think QE unless you get to half a point or less.
Cody, do you have a question for that?
Do you foresee negative interest rates a year from now? If the Fed goes to zero, are the actual interest rates in this country negative as they are in much of Europe and Japan?
Cody, you have a chance for that. Let me tell you why. People told me 6 or 7 years ago, when you were watching Japan with negative rates, that there was no way that you would get negative rates in Germany. And today, across the board, 1 month all the way out to 30, the straight curve is negative. So while I say that, and I don't want to give a percentage because that's a cop-out, but I do think that if you got down to a point where you were a quarter point Fed funds or zero and people really got worried about what's going on, that you could see that.
Ted, good to see you.
Okay,
Thank you so much, sir. Have a great weekend. Ted Oakley.
Thanks.